Let's move on now and put the spotlight on the consumer space. And remember, we've been telling you about the JPMorgan Summit, the investor conference that's underway here in Mumbai. And now we have with us Latika Chopra, Head India Consumer Research at JPMorgan, from the sidelines of the Investor Summit. Latika, great to have you on. Good morning. Thanks for joining in. So I think, you are looking at what right now in the market is once again turning out to be a hot sector, because everyone's talking about whether the rural recovery is for real and whether consumer companies, especially staple companies, whether they can come back with more promising growth once again. What are your opening thoughts?
Yeah, thank you. Good to be on the show. We started to become positive on the FMCG sector in India, about 5-6 months ago. And there were three reasons, actually. One is, as you talked about, demand narrative started to improve positively. So if you look at the volume growth trajectory for staple companies, it kind of started to stabilize about 2 quarters ago, and it's starting to inch up. And we are seeing, rural particularly catching up, with the urban growth levels. However, we need to wait out to see the durability, the quantum of recovery for the staple packs as far as volume growth is concerned. We are kind of gravitating towards, volume growth levels for most of the FMCG companies to move from flattish to low single-digit levels in the first half of FY25, gravitating more towards mid-single-digit levels. And clearly, upcoming months will be very important. We have so far seen a decent monsoon. We have seen a decent crop sowing data. And we will watch out for how the crop harvest looks like, how the festive sentiment really plays out, to further build up, more on this aspect. But for now, we think this is going to be more a gradual recovery and things to pick up in the second half. The second thing which is going to kind of aid the revenue growth momentum for staples in our view is pricing. This is a piece which was kind of missing for the last 1.5 years. And now we sense, some price increases being initiated in the market. These are still low and probably in the zone of low single digit at the moment. And depending on how inflationary trends really play out, this is another leg which will strengthen and add to the overall revenue growth momentum. And the third piece, which kind of keeps us relatively more positive is that the margins for the sector are largely going to hold out, right? And the good news here is that companies are actually focusing on investing back to drive growth, whether it's in terms of innovation, whether it's in terms of getting the go-to-market right. We think margins are going to see a modest expansion, and that's good till the focus is on top-line driven growth. So net-net, for the sector, we think earnings downgrade cycle is largely behind us, and we hope that we get enough good data points for the sector to start seeing earnings upgrade, in the coming months. So overall, on a relative basis, we like the sector. Yeah.
All right. Interesting. Hi, Latika, and good morning, and good to have you on the show. Wishing you all the best for the conference. This is Nigel on this side. Given that there are some green shoots on the rural side of things, and that's encouraging to hear, how are you positioned between discretionary spends as well as staples?
See, at this point, from a strategy perspective, we continue to prefer staples. Rural, if you see, Nigel, has been coming back from a depressed pace, right? And also expectations, I think, on staples have not been humongous in our view. Right. As far as urban discretionary demand is concerned, of course, there are different pockets and different nuances to each of the pockets. And then, of course, one is to also look at sector valuations and relative valuations to play. But at this point, we are preferring staples, where we also sense that the relative valuations with respect to the markets are broadly okay. Yeah. I think upcoming festive season will be key to gauge, how discretionary demand really plays out, and there are key sectors like jewelry, paints, durables, which will basically have some, takeaways from how strong the festive season is going to be in the coming quarters. We do sense at present that the urban demand has been more or less stable. Of course, last quarter we had seasonality-led, upticks in some of the sectors like durables, but we will wait and watch.
Right. Latika, hi, morning. Do you have coverage on trend?
No. And
Okay,
we are
all right.
not allowed to talk about company-specific
Individual,
stocks.
individual companies. Got that. All right. That's been the sort of outsized winner, hasn't it? Just a quick word on QSR, Latika, if you will, as a space. I mean, again, has been beaten down, has not done well over the last couple of years. Are we going to, is the space going to see any traction here? And what's the way to think about this?
Yeah, sure. So I think QSR is definitely an attractive, consumption opportunity from long term. The food services market in India is upwards of $50 billion. If you look at the QSR piece, that's about $5 billion of this. And of course, there are multiple mega trends, young demographics, a consumer who's increasingly seeking convenience, hygiene, experience, and growing urbanization, right? So I think the long-term attractive opportunity is quite well established. Of course, in the last few quarters, we have seen comps, the same-store sale comps for this sector being impacted negatively. And I think there are three reasons for this. One is, of course, the macro factors, inflation, value for price, or value positioning kind of getting impacted because of price hikes that players took. The second has been the shift of the category itself to more delivery. And the third bit is that, post-pandemic, we did see a significant acceleration in new store openings. And that kind of, again, weighed down on same-store comps. I think the good news is that, again, here, the players, the key large QSR players are very, very focused on driving consumer footfall backs, and they're willing to keep margins, give margins less priority versus top line. And we are seeing more and more menu offerings coming on the value side. So if you look into any of the formats, you will find there's a very specific price point advertising that you're seeing, rupees 69, 99, 149, and this is the way to convey to the consumer the value positioning, and this is actually helping drive consumer footfall. So we have seen a sequential improvement in transaction volumes finally playing out for the sector. Of course, the delivery piece is, scaling is coming back strongly first. The second bit is, I think companies have also been quite prudently calibrating their store expansion plans, right? I think we can sense that now from them, and more stores are coming in virgin locations, right? So again, there is lesser, negative effect on same-store sales comps. We think here, the first half of FY25 has likely seen the bottoming of same-store comps, and we are quite hopeful that we are going to see improvement in these comps, in the second half of the year. So yes, this is a space where we are relatively more positive on.
All right, Latika, appreciate you joining in. Wishing you a good conference. We look forward to having a chat with you in the coming weeks as well. Well, let's